Hello, everyone. Once again, this is Black Forest coming to you with another market analysis currency breakdown. We're going to be looking at the USDCAD, okay, the US dollar, Canadian dollar. But before we start to break down this chart and this currency pair, we have to state that this video is for educational purposes only. This is not financial advice. But we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and to help put some extra money in your pocket, especially in troubling times, okay? So with that being said, let's go ahead and break down this chart. In this currency pair, let's first start with the currency pair, okay? Now, this whole USD-CAD pair is all contingent on the gas prices, and this is just solely due to one thing, the traditional or non-traditional relationships between gas for the USD and the CAD. Okay, so the CAD has a traditional relationship with oil, and the US dollar has developed a non-traditional relationship with oil. This is due to the current geopolitics between Russia and Ukraine. Okay, so due to the CAD's traditional relationship with oil, if oil prices go up, then the value of the Canadian dollar goes up. If oil prices go down, the value of the Canadian dollar has gone down. And since the beginning of the year, really, the Canadian dollar has been very lukewarm, with the deciding factor being oil pushing it from either strong to weak. Okay, and we still have that going on. We've had some negative news come out about the CAD at the opening of the New York trading session for today. But we also have some very strong oil news as well that shows us that the volume of oil around the world has decreased in circulation, which brings about the prices of oil and gas. Okay, so if oil continues to go up, we will continue to see a strengthening of the CAD. Okay, but if oil goes down, we will start to see a weakening of the CAD. Now, between with the U.S., the U.S. inflation is being totally fueled by gas prices. Okay, and now gas prices has an artificial, and the oil circulation around the world has an artificial decrease due to the sanctions placed on Russian oil as punishment for Russia invading Ukraine. So basically, this is it in a nutshell. Okay, due to the Russia invasion of Ukraine, gas prices have went up due to the nations around the world banning Russian oil and they're not buying it. Okay, so with that being said, this causes the U.S. dollar to become much weaker because the inflation that's in America is solely being driven and catalyzed by oil prices. Okay, so it comes down to this simple solution. It comes down to this simple scenario. If oil prices continue to go up, the U.S. dollar will continue to get weak. If oil prices continue to go down, then the U.S. dollar will get strong. Okay, so this whole chart is all the contingent on oil. Okay. Now there has been some news come out about the USD that's supposed to be coming out on Wednesday concerning the CPI, and there's not too much news coming out between now and Wednesday with the USD. So the last news that we got on the USD was that we've been having more positive news than negative news. We've been having more negative news than positive news. Couple that with the how high gas prices are, we're starting to see a stagnation in the trajectory strength of the U.S. dollar. And based on how that CPI news comes out on Wednesday, we can start to see price actually U.S. dollar turn from one of our stronger trading currencies to actually one of our weaker ones. Okay. Now, with that being said, let's go ahead and break down the chart. Now, break it down. Look at this chart. We're going to be looking for a drop in price, and how far can price drop? Easily can tell. It could drop as far as here, drop as far as here, or drop as far as here before it starts to retrace and to head back up. And based on how that retracement is going to really let us know whether this chart is going to continue towards the long-term long position, or is it going to change over to and go towards a long-term short position. Okay, so if the retracement comes in with huge green candles coming in to going towards the long side, then we could say that the long-term buying is not over. But if we start to see huge red, if we start to see huge red candles with weak pathetic green candles coming in, then we can safely say retracement is we can say safely say retracement that price excuse me that we can safely say that retracement is pathetic and price is turning over. Okay, and with that being said, happy trading.